In the currency quadrant, the March British pound future fell for the second straight session, despite actually holding near a 3-month high. The high today was 135.15, which was up 0.12%, and the low today is 134.64, down 0.31%. Now, as we come into the close of the future session, the British pound is still on its lows, down about 0.28% as I speak to you, which means that since there's a little bit of time left in the session, it still could move lower. So far, the 2-day move lower that I talked about leaves the March pound down about 0.57%. This move, of course, does not derail the rally that the British pound has been in since the low of about November 4th of last year. Since then, the pound is up about 3.5%. Now, economic data in the UK continues to show slight weakness relative to expectations. Composite and services PMI this week both missed expectations despite remaining in expansion territory, as well as beating the last month's print for the same data. Construction PMI for December fell to 40.1 versus expectations of 42.4, and last week's the UK's nationwide home price index missed expectations on both the year-over-year, month-over-month basis, and the month-over-month print came in at minus 0.4%. At its core, bad economic data is bad for the currency, but of course the direction of the dollar has quite a bit to do with what happens to these other currencies. Now, the dollar, when taken against most currencies in aggregate, has rallied almost 1%. But on Friday, we get U.S. Nonfarm Payrolls data, which will likely move the dollar and be the next driver for the pound, as well as most of the other major currencies. Expectations are for payroll growth in the U.S., but only to the tune of about 57,000 jobs, and that will be the next catalyst for British pound traders, and it should be what they are watching going forward.